If you haven't already taken a peek at this Accounting 241 Knowledge Pre-Check, I strongly encourage you to stop the video and go back and see if you can complete these yourself before watching this video and me talking about some of these ideas on here, because these ideas are really key to building your foundation in financial accounting or the accounting cycle or recording accounting transactions for business. So understanding these high-level concepts will help us back into all the details that we're going to be working on, primarily in Chapter 1, and as we continue to build on these. So stop the video. If you haven't already completed these, complete them and then come back. So what is the accounting equation? So the accounting equation is the basis for keeping all of our financial records and individual transactions in balance for any type of business. So this applies to every single business, and it is assets equals liabilities plus equity. Now, in this class, we are going to be talking about primarily stockholders' equity, which is for corporations. But keep in mind that there is also something known as strictly owner's equity, which applies to sole proprietors and partnerships. And, I'm going to go ahead and put it out there. Okay. Sole proprietors and partnerships. Okay. So I want you to keep that in mind about equity. So either stockholders' equity or owner's equity. There we go. I like that a little bit better. Okay. Owners essentially is what the equity part of the accounting equation represents. Okay. So as we work towards explaining some of these down here, I'm going to talk a little bit more about that. So that is the accounting equation. Something to keep in mind is that this must always be mathematically in balance. Okay. So as we record transactions, we're going to use this thing called the double entry accounting system, which really just means we always have to record a minimum of 2 transactions in which those are always keeping that accounting equation in balance. So the left side must always equal the right side. And you're going to get some practice with that in some of the homework problems. Now, moving on, let's talk about assets. So what are assets? Assets are really anything owned by the company that will provide future benefits. Now, in Canvas, there is a document called Accounting Equation Elements. I encourage you to spend some time with these so you can see where everything fits together. This will help us record transactions. So, what are some examples of assets? These include cash, accounts receivable, inventory, supplies, anything that's a prepaid asset. This could be insurance, rent, anything like that, anything we pay in advance. The key is that it's going to provide the company with some benefit in the future. Now, that is a little bit different than liabilities. So this is anything that the company has a future obligation for. Okay, or 2. So some examples of this are anything that's payable or anything that is owed, anything that is a debt, for example. So this can be accounts payable, notes payable, which are loans, could be taxes payable, utilities payable, or it could be simply something called an unearned revenue. This is revenue received in advance, and this is something that we have to earn over some period in the future. Now, what is owner's equity? Again, this is for sole proprietors and partnerships. That is what owner's equity is referred to when we're talking about a sole proprietor or a partnership. And the key with that is it represents what assets are owned by the company. In a stockholders' equity situation, this is corporations. And what I want you to keep in mind about corporations is that these can either be privately held or publicly held. And if they're publicly held, that means that they trade stock on an open stock exchange for anyone to purchase. Okay, and that's going to be important to keep in mind as we move forward. Okay, again, what is stockholders' equity? It represents what assets are owned by the company. Now let's contrast that just a minute to liabilities. Okay, it is possible for a company to have a liability, and if that's the case, these are things that are due to a creditor. Okay, that means a creditor is who we're going to pay. For here, this is strictly, essentially, think about it as due to owners. So if we are generating net income in our business, that is going to be due to the owners. And we'll get into more about what that structure looks like. When does a company earn revenue? A company earns revenue when a service or good is delivered. Now, one thing we're going to be learning a lot about is accrual basis accounting. And so accrual basis accounting says it does not matter if cash has been received. We have earned revenue as soon as that good or service is delivered. Now, same with expense. When a company utilizes a resource to generate revenue. Again, accrual basis accounting. So as soon as we utilize a resource in our business to generate revenue, that is considered an expense. Now we are going to get into some nuances about the differences between something that we would call an expense and something that we would actually call an asset and defer expense sometime into the future. And we'll get into that more. Now, as we kind of wrap up this pre-check, what does debit mean? Well, I want you to keep in mind that debit just means left. It means nothing more than that. And that's going to help us in our analysis of T accounts, which we're going to see later on. Same thing here. What does credit mean? Credit simply means right. And again, that's going to help us when we start thinking about T accounts and how things must be recorded. As we think about the accounting equation, a couple of things that we always have to remember. Assets, are they increased by a debit or a credit? Assets are always going to be increased by debits. Now, this is important to keep in mind because as we learn how to change the value of certain accounts in accounting, that's going to be key. Liabilities are always increased by a credit, and equity is always increased by a credit. And so as we get into learning more about each of these components, I want you to always think back to this document and think back to the basics and the foundation. If we always return to this, it's going to be very helpful for us as we continue to make progress learning all of the nuances surrounding accounting.